Hey everyone, in this video I've got one growth stock that's down 63% off its high that you might regret not buying on the dip. But before I reveal what the name of this growth stock is, I'm going to highlight some of its financial characteristics and then I'll let you know what the name is. So let's get right into it, starting with this company's revenue growth, which has been excellent over the years, although it is slowing down. You can see the chart of its quarterly revenue growth falling from around 50% around 2016, and in its most recent quarter, it grew revenue at 23.6%. Although I do expect its revenue growth to rebound closer to 30% over the next several quarters. That is because in the last 2 quarters, enterprises worldwide have reduced spending significantly on software capital projects, which is what this company sells. It sells custom software to enterprises focused on cloud delivery of these products. Now, as you might be aware of, companies have been expecting a recession for like 4 quarters now, and they really pulled back spending 2 quarters ago to be cautious for that upcoming recession. But as we approach, as time goes on, since the Federal Reserve has rapidly increased interest rates, the fears of a recession are moderating. It's not to say that enterprises are not expecting a recession anymore, but if there is a recession, they're expecting it to be more moderate than severe. So that's causing enterprises to rethink their spending pullback and really kind of feeling comfortable spending on those projects that they have paused or delayed. So I think this is a good time to get into this stock before that reacceleration really takes hold and the stock price accelerates. So in addition to its excellent revenue growth, this company's done a really good job turning that revenue into cash flow. Now, before the pullback here, you could see around late 2021, early 2022, you saw a nice upward trend from this company. As revenue grows, it grows its cash flow from operations. It reached a peak over 40% in late 2021 before coming down and still respectable 26%. Now, if revenue growth re-accelerates over the next several quarters, as I suspect it will, this cash flow from operations is likely to at least flatten out or increase over the next several quarters. The last reason I'll give why you might regret not buying this growth stock on the dip is because of the relatively inexpensive valuation. You have not been able to buy this stock this cheaply since even before July of 2021. So more than around 2 years, this stock is cheaper than it's been, and you could go back even further and it's not likely you were able to buy this stock at a cheaper price. What I have here is the chart of its forward price to earnings ratio, and most recently it traded at 55, which is the cheapest it's been since several years. So you're getting this company excellent revenue growth. It's done a great job turning that revenue growth into cash flow from operations, and it's poised to benefit if enterprises accelerate their spending or restart their spending, their capital budget software projects that they pulled back on, that they paused when they were afraid of a deep and severe recession. All right, for all those reasons, I think you might regret buying this growth stock here. What is the growth stock? What's the name? This is Atlassian Corporation, ticker symbol TEAM, TEAM. This is one growth stock I think you might regret not buying on this dip here. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.